Right. Good evening. Thank you very much for joining us tonight. It is the Bottom Line, and we are live here in our studios at Rich in Accra. Tonight, we are talking about the merger between the ADB Bank and the NIB, which has been proposed by government, and the minority in Parliament is kicking against it, citing a collusion between government and the managers of the economy, so government and the Bank of Ghana, in trying to, what they describe as a state capture, have a state capture of these two banks, sell the banks to their cronies. We are not going to concentrate on the politics tonight. We are concentrating on the business aspect of it, on the business analytics aspect of it, whether it is actually a feasible idea or a reasonable idea to merge these two banks. What are their books saying? What has been their NPL rates? What has been their performances so far? Is there the need for recapitalization or not? So these are the things we are going to look at tonight. You want to stick and stay with us? This is the Bottom Line. When we come back, we'll have experts from the business school and, of course, a banking consultant to speak to tonight and ask these very pertinent questions and then arrive at a conclusion of whether to merge these two banks or to allow them to reoperate or to operate and recapitalize. Stay with us, we'll be right back. Righty, welcome back from the break. This is still the Bottom Line. And if you just tuned in, let me still reintroduce the topic to you, that tonight we are tackling the proposed merger between ADB and NIB and the opposition against this proposition by the minority in Parliament, who is citing an allegation of a collusion between government and the managers of Bank of Ghana to sell these two banks to their cronies. And so they are not going to allow that to happen. They have vowed to kick against it. The opposition or the minority in Parliament has been led in these agitations by a senior member of the minority caucus in Parliament, Honorable Isaac Adungu. We would allow him to speak and then also go through some of the facts that exist. When we come back from that bite, I'll get onto Zoom and speak to a financial economist from the University of Ghana Business School and a banking consultant. For now, let's hear from Honorable Isaac Adungu.
Ladies and gentlemen, it is instructive to note that every viable and constructive alternative proposals by well-meaning Ghanaians aimed at resolving the problems of NIB were preferred but were ignored by the government. NIB's biggest problem is that it is suffering from capitalization deficit of 2.4 billion Ghana cedis. However, a casual review of NIB's balance sheet does show that a restructuring of the balance sheet alone can produce in excess of 2.75 billion to offset the 2.4 billion and still leave a balance of 350 million Ghana cedis towards recapitalization. What it then means is that if you just look on the balance sheet of NIB and you do what we finance people call restructuring, rearranging the funds and redefining the obligations on the balance sheet alone, you will find that NIB would raise 2.7 billion money that it currently is sitting on. Mr. Kenneth Foriata refused to pay contractors that had taken loans from NIB to finance government contracts, and certificates had been raised and he was not paid. And per the requirements of IFRS 9, which is an accounting standard, those loans had to be impaired. And the impairment led to a loss of 860 million Ghana cedis on NIB books. So if Ken Oforiatta had paid at the time, as common sense will show, NIB would have gotten 860 million back to reduce its deficit. They refused to do that. It is therefore not surprising that the IMF, under the current program, identifies the resolution of the problems of NIB as a key deliverable that we must meet. We in the minority agree that we must work together to find a solution to that problem so that we can be compliant with the agreement that Ghana has taken on with the IMF, but at the same time able to produce a strong and viable bank and financial institutions. It is important to note that the strategy that the government is pursuing is to ultimately collapse NIB. Despite the large size of NIB, its wider reach across the country, and its position as a strategic systemic bank. What you are now telling us is that you will now give the money to one of your banks, your own, ADB. Is that not it? Then ADB will come and buy your own bank, NIB. And the next morning you wake up and wash your face and say that I have lost NIB, I have sold it. Who provided the money? You. Who bought NIB? You. Who did they pay the money to? You. Why this complex arrangement? So you can see where the trick is. When these people make things complex, open your eyes. They are very simple finance things we learned in school. Why are they making it look so complex? They don't even. We want to provide some solutions to deal with this matter because the complexities they are introducing just doesn't make any finance sense. We said the government should just restructure the balance sheet of NIB to swap all the NIB debts that it owes to government and give government equity. Government says it doesn't have money to capitalize the bank, but it has given 500 million debt bond to NIB. It has given 800 million debt to NIB. The two give you how much? 1.3 billion. Is that not it? It is your money. You own the bank. The money is already sitting there. Commit to saying that that is my contribution towards recapitalization, so that we issue shares for you and move the money to it. 1.3 billion. When they came to give the 500 million, they looked for the most important asset on the balance sheet of NIB and harvested it. Ken Oforeta and his people took the NIB Nestle shares, the 24% shares, the most valuable item on their balance sheet. They took it to the finance ministry. I just want to hope that that thing has not walked into somebody's household. So now that we have given you shares for the 500 million, do you have a business holding our Nestle shares? Bring it back. When you now bring it back, NIB should sell those shares for 500 million and realize a capital gain of 450 million to increase the equity by that amount to 1.75 billion. You see where we are headed? The problem is just sitting there. The money is sitting in the NIB balance sheet, nowhere. Contractors that NIB gave monies to do government projects. To date, Ken is not paying the monies. And as a result of that, NIB has impaired 1 billion of its loan books, resulting from Ken Oforiatta refusing to pay. Now you are saying NIB is weak. You are the Ashanti who say, you created this problem. So pay NIB contractors. And NIB will restate the 1 billion it has written off against its profit, and it will go up by 1 billion to give them 2.75 billion of equity. Already you see that the 2.4 has disappeared. It is left with how much? 350 million. You were in this country when Bank of Ghana governor said that they were going to set up a financial stability fund of 15 billion. Give that 50 million out of that money to Financial Investment Trust owned by the Bank of Ghana to come and buy a stake of 50 million in NIB. And NIB will now have all the money, almost 1.8 billion it needs to recapitalize. So NIB will be well capitalized. It will meet the minimum capital requirement. But don't forget that that 1 billion you paid for the contractors will increase NIB cash by 1 billion. That 500 million that we sold of the shares, we increased NIB cash by another 500 million. That's 1.5. The bonds of 1.3 billion that we have given you shares for becomes investment sitting on the books of NIB. NIB can sell those investments to realize 1.3 billion. So 1.3 billion cash plus 1.5 billion cash, NIB will be the most liquid bank in Ghana with cash position of 2.8 billion.
So that's Honorable Isaac Adungu from the minority making these suggestions. And let me talk to Professor Lord Mensah. Professor Lord Mensah is a financial economist from the University of Ghana Business School. Prof, good evening. If you can hear me, thank you very much for joining us. And I do hope that you listened or you watched Honorable Isaac Adungu. Do you make any sense of what he has said so far?
Yes, I do. I mean, in summary, I mean, he's trying to say that, NIB is cash trap, and all that they need is an injection, and it can come in several forms. Either they convert government, debt to equity, or possibly need, an injection to make it an active bank. Now, clearly, if you look at a merger or a takeover, I was looking at, a bank that will be in good standing to absorb or take over, a bank that is weaker. Now, if you go through, the balance sheet of ADB, clearly you could see that ADB in itself, which is also government-oriented, in itself is also, struggling. And in the end, if you merge, a weak bank with another weak bank, you end up creating, a monster. So the merged entity will have a lot of, liabilities, to deal with. Now, if you take, ADB and then NIB, they exist for a purpose. And there's a reason why they turn out to be, state, quasi, state-oriented, bank. And because they are state-oriented banks, they have to serve, economic purpose, serve financial purpose, and at the same time, serve a social purpose. And I believe over the years that NIB has been in existence, because of their coverage, when it comes to the number of branches and then the various locations that they cover, they've assumed, beyond just the financial and economic purpose that a finance minister is looking at to take a decision to merge it or absorb it, allow ADB to absorb, NIB. Now, what I see going forward, if we go ahead with this kind of, decision, we'll end up producing a merged entity, which is more weaker, for which we'll start calling for, a restructuring on the balance sheet of the new entity that will be created as a result of, the takeover. So I believe that we should look beyond just the financial and economic purpose, and then think about the social purpose. I saw an article online, this morning, looking at, the workers at NIB having gone through their balance sheet and then calling for the government to intervene for a correction to be done, right? And I believe that they understand the social consequence, because if you merge two entities and it turns up that both of them have branches 100 meters apart, I don't think the merged entity will allow the two branches to, stay within that 100 meters, radii. So effectively, one will go. And if it's going, it will go with the branch manager, because there won't be a duplication of, same caliber of people within a branch. So you cannot absorb all the workforce to a branch. So one branch will go, it will go with a branch manager. go with the workers over there, at the end of the day, they've lost their job. And we are talking about the economic situation we find ourselves in now.
Yes, exactly.
I understand. If you look at it from the perspective of just the numbers, you can say that, yes, NIB has been struggling over the years. And as a result, why are they struggling? They're struggling because of the upper part of their balance sheet. If I say upper part, I'm looking at, the cash aspect of it, and then the possible loans that they gave out, and where the loans find themselves. And if the loans should be paid, would they be active, or would they come back as a solvent bank? That is what we need to look at. If that is the case, then it means the NIB has a prospect. If NIB is struggling from upper part of its balance sheet and the bottom part of the balance sheet is strong, then it means that it's a bank that needs just an injection. Now,
but
if you are allowing ADB to take over NIB, that the ADB has that financial muscle to neutralize the weakness that NIB comes with. I don't think ADB has that financial muscle. ADB also being, government-oriented, right, bank, I don't think they also have the financial muscle to neutralize the weakness that, NIB brings on board. So we need external, injection. We need, investors to come in. And I'm also careful, because I will allow you to come in with your
right.
But let me
Go on, please go on.
See, we're looking at the financial architecture. You see, if you have a financial structure, we're talking about banks, their branches, and the client outreach. When they assume a certain structure and you want to, destroy it, or you want to restructure it, you really have to be careful, because it can go a long way to have impact on the economy. Look at what we did with the banking sector cleanup. How we merged some of the banks, and then we crunched some of the banks together to a point where we don't even know whether the merger was at an optimum situation for which people will be losing their jobs. At the end of the day, the impact on the economy, and then the businesses that were dealing with those banks that were merged, the kind of relationship they have created over the years. We never thought of all those things. So the financial architecture, assuming a certain, lattice, if you want to break it, you really have to be careful. So there's economic reason why NIB has been in existence all this while. And I presume that if by the time you go into their asset structure, grow down into the loans they have, as Honorable Adongo was saying, chunk of the loans will go to government, oriented businesses. So it turns around being in a cycle. And some of them are being, as a result of influence, through the government representative on the board and all those, that most of the loans, will be passed on. So from where I sit, I think a bank that is struggling on its upper part of, balance sheet, you don't have to, allow it to be absorbed. And then also the social consequence, people losing their jobs and then affecting family income here and there, and then possibly, affecting children at homes and all those. We really have to be careful. We are talking about over 900, workforce. And with the current economic situation, we cannot afford to have, people losing their jobs in that manner. So, I think more needs to be done. Government should think twice, even though it's part of a requirement by the IMF to get rid of some, state assets that have, that are more of a liability than, asset. But you may have to wait and look at the prospect of, that state entity. And NIB has, the prospect, and we may have to look at it, especially when we've gone through wave of financial sector cleanup, which has cost us, a lot. If we go further to do this, it may affect, the economy.
Prof, kindly hold on there. I have Dr. Richmond Etuahine on the line. But before I go to Dr. Etuahine, if I get you right, you're saying that the mergers and acquisitions are right. I mean, it's a good thing. But because of the social impact and the current economic conditions we have in the country, it is not right for us to have that merger of NIB now. And even if we do,
and then also the prospect that NIB have,
the
if
prospects
they get liquefied,
and
cash
again,
injected.
you are saying that even if we do, it is not in the position of ADB to be doing that. We've seen the last 5-year financial statement of ADB, and they have been running losses.
Yeah, that's exactly what I'm saying. They don't have the financial muscle, to cater for the weakness that NIB brings on board.
Okay. So I'll come back to you to be asking about the management structures and so on and so forth. That if we are having lots of NPLs, non-performing loans, as we say, the upper part of their balance sheet, and we have management still lending out to government and coming back to blame government. We now have workers accusing government of the fact that if they return their monies, they will be able to stand on their feet and so on and so forth. Why should the management still be in place if they keep lending to government? But I'll come back to you on that. Let me go to Dr. Richmond Etuahene, who is a banking consultant who has also joined us via Zoom. Doc, good evening. Thank you very much for joining us. And let me ask, first of all, if you watched the bites we played of Honorable Adungo, whether you agree with him, and then you've listened to Prof as well, what do you make of it? Doc, can you hear me? Kindly unmute your mic. And okay, yes, I can hear you now, Doc.
Yes, I thought the question was for Mr. Etuahene.
Yes, Doc, I am actually asking Mr. Etuahene. Mr. Etuahene, can you hear me? Kindly unmute your mic for me, Mr. Etuahene. Doc Etuahene. Well, it seems that we're having some network issues with Dr. Etuahene. But let me come back to you, Prof, and ask the question of, usually when we have challenges in the banking sector, if you look at what happened some 6 or 7 years ago with the financial sector cleanup, which you stated, we had one of the major issues being corporate and governance structures. We had NPLs, we had all of those issues being listed, insolvency and so on and so forth. We have a team which is supposed to ensure these corporate and governance structures, ensure that the bank doesn't run into loss. And we have had events where capital has been re-injected into these banks, and we are still here where we are. Actually, in 2017, the Minister of Finance, Honorable Ken Ofori-Atta, had hinted the merger between ADB and NIB. It didn't happen because the President, His Excellency Nana Addo Dankwa Akufo-Addo, had said that the same reasons that you give, the social impact. He wants the ADB to be able to finance agric, NIB to be able to finance investment, promote investment. But when you go to NIB's website today, you won't find anything around investor support, anything around SMEs, anything around support for businesses and so on and so forth. There's a general business as usual, general banking as usual. Management structures, do you think they have done enough to be kept there?
Yeah, so when you talk about bank, you are looking at the board, right?
Yes.
And then go down to the MD, and then drill down to operations, financial managers, and all those. But let's look at the board. The board is determined by, shareholdings. And of course, government being the largest shareholder, you expect that the larger chunk of the representation on the board is going to be, the government reps, right? And loans to a certain threshold may be passed on to the board. And these are the reasons why we are saying that for those banks that are government-oriented, we may need, a private investor, to pump in money so that they can hold up part of the, the shareholdings. And that will influence the directions of their loans and the way they lend to businesses and all those. Government may have interest in there. When you take ADB, for instance, about 64, when you combine the Financial Investment Trust, Government of Ghana, and then Ghana Amalgamated, Trust, the shareholdings alone, it's more than 96% of ADB's, shares. And I mean, and all these things are quasi-government-oriented, SPVs. which has been created, and effectively, I mean, special purpose vehicles, which has been created. Ghana Financial Investment Trust Fund was, created by, Paul Akwa when he was, Bank of Ghana governor. When you put all this together, you come to appreciate that everything is about the government. And loans are also given to government-oriented businesses, contractors who are running the government. And the loans to a certain threshold may have to come to the board. And you see, having the larger chunk of the shareholdings, the board will pass the loan. And once it is passed and it gets, out there and it's not being paid, it's the same, cycle we are running around. So now that we've come to realization, like, the question you are asking, shouldn't the management be changed? I mean, how do you change management? It's about restructuring the shareholdings.
Yes.
And then ensuring that the private man takes at least 70% of the shareholdings. Government may have interest in there to direct, some of the policies that government may want to churn out. As we are looking at ADB, targeting agriculture, even ADB as we speak now, I mean, if you go into their loan portfolio, they do few, agriculture loans.
Yes.
And the NIB itself, I mean, standing for investment, I mean, may not necessarily be going to government, investment policy-oriented activity. So from where I sit, I think it's a matter of getting in the private sector to inject funds so that they will hold up part of the shareholding, I mean, going forward. And it will tame down, the rate at which bad loans are passed, because if loans, government is not doing well economically, the economies are not doing well, and government, I mean, cronies count for loans for their contract and all those, and they are passed because of the, the larger chunk of representatives of the government on the board. So I think it has to do with investment, and the board can only be changed when, we change the shareholdings.
Would you say the government, well, let's say for the fiscal and monetary purposes, so Ministry of Finance to be specific, and the Bank of Ghana have the moral right to take the action they are purporting to take, with all the explanations given?
The timing of a merger must also be taken into consideration. You see, these are two banks who recorded negative, they recorded losses, in 2022. Even before the 2022, the two banks were not doing well. So that should tell you that if you should put the two together, you may end up creating a monster, which will be a liability to the economy. And being the government-oriented banks, if you put them together, you are going to, increase, the possible, liabilities that they are carrying. And so if there is a kind of, there is more of a non-performing loans, and you are combining two banks who are recording more non-performing loans, what are you doing? You are just, bringing more
compounding the non-performing loans.
Yes, you are compounding the problem, and we don't expect that to happen. That is why we've been calling for external injection. I mean, if you get any investor to assess NIB's, situation, they will just tell you that NIB is just struggling at the upper part of their balance sheet. Looking at, they are just cash strapped. Once you pump in cash, things will be fine, because all the branches are in existence. They have the workforce being active, very young men walk around who can, bring in businesses and all those. So I think, and then, the current economic situation, if you really want to merge, you may have to, go through a takeover exercise. You may have to be careful. Now, let's take the individual banks and then the possible, outcome bank. If we allow ADB to take over NIB. Now, NIB, per the structures, if you want to look at the economic value of NIB, is a very, weak number. And then the same as that of the, ADB. So the combined entity that will come out will definitely have, a weak economic, indicator. And so we don't expect that to happen. When it happens like that, because the government is holding the largest share, government will be forced to, pump in money. Where is the government going to get the money? They may have to, get, external, what do we call it, investor. By that time, the harm has already been done. By that time, you have collapsed, several branches for which people are sitting at home. And, an investor coming in may not want to call those people to join the bank again. And so therefore, you've created unemployment out of something that you could have, control. So I think they should allow the structure to stay. I mean, the financial structure of both banks to stay, and then get, external investors to come in.
But do you also agree with the minority in Parliament? Of course, we don't do politics here on this show, but that the government should pay the contractors, first of all. Government should also pay back the money it owes these banks, and they will be back on their feet.
Yeah, it makes sense.
Apart from getting the external investors.
Yes, it makes sense because, but where would the government get the money from? Government should pay contractors. The economy is struggling.
Right.
Banks have to take haircut, to bring down government obligations on, expenditure. So effectively, it tells you that government will find it difficult to get the money. And so where should you look at? When it happens like that, this economy, as we speak now, we need external inflows. Let me tell you what is happening in the economy. The current situation we find ourselves in, right? If you want to really study every economy and to indicate whether the economy is struggling or not, you may have to look at what we call the yield curve, the interest rate structures. You see, we did a debt restructuring, and the yield curve for long-term instrument is now lower than the short-term instrument. That's an inverted yield curve. And every economist or every financial economist will tell you that you cannot manage an economy with such, interest rate structure, because everything is short-term. Now, we've been in that situation before when, that was when Setepe was a finance minister. And by that time, we had access to the international market. So we were quick to borrow long-term from the international market to come and offset short-term debt here. And then government started borrowing, from relatively long-term, from 2 years to 3 years. And that is when we're able to correct the yield curve, for which the short-term interest rate, started coming down. And then the long-term, rate, started going up. And then we had a smooth, economy. And at the end of the day, investment started going long-term. But here is the case. We don't have access to any international market anymore. We've been priced out. So where are we going to get external injection? We may have to lay off certain state assets that are not performing to expectation. And before we do that, we may have to weigh whether the asset has prospect or not. It's not just every asset that we put them together and then we create a monster out of it. And later we'll be looking out for, somebody to take over the monster. And it loses our bargaining power as a country if we are to put up, such entities. So from where I sit, I think we've done enough to the financial space. We have fidgeted enough with the banking space, destroyed the financial architecture, which has had economic repercussions. Let's look at the 21 billion Ghana cedis that we spent on the banking sector, cleanup. Have we been able to recoup it through the taxes and other things that we're supposed to get from the banks? I will tell you that no. So that exercise, we are still struggling with it. So why do we have to go forward with similar, exercise by merging two weaker banks, right? Which will end up producing a weaker, entity, which needs to be managed, by the government. So I don't think it's the timing is wrong for such an exercise.
Prof, I think I have Dr. Richmond Etuahine, who is a banking consultant on the line. Let me just pick a few thoughts from him. And he's been listening in. Unfortunately, the internet hasn't done him good. Doc, if you can hear me, good evening. Thank you very much for joining us. Early on, I had tried to get you on your comment about the member of Minority Caucus's statement on what's happening with the two banks. And Prof has been speaking also, proffering some ideas, especially on the social impact, meaning the reason for which these banks cannot be merged now. If you can hear me, Can we hear from you on that?
Thank you very much. And good evening to Prof. Lord Mensah.
Right.
Happy to hear from him.
Mm.
They are the guys
Yes,
who
good
have
evening.
made things stick when it comes to this analysis.
Mm-hmm.
I have listened to him critically, and I have said all along that bringing two weaker banks together is just creating a disaster. You know, in what we call a strategic fit, 1+1 in mergers and acquisitions should be 3, not even 2. But if you have two weaker banks, you're going to have minus something. And that it means you are destroying the two entities altogether. Because from where these two banks are, they are very, very weak. And I listened to Prof, and Prof is making a very good analysis. But my first advice will be that we need to do an comprehensive and extensive audit of the banks. If we, as currently we've been told that NIB government owns 2.1 billion to contractors. What the government can do, if you want to use financial engineering, it can ring-fence the 2.1 billion and look the good part of the bank and encourage the private domestic investors in this country to buy in. You ring-fence the debt, you take it out from their books, right? And look at the bank and get people private sector equity. Ghanaians, there are no Ghanaians who are interested to buy a bank. Maybe they will buy it. Because you see, to go and tell any foreigner to come and buy this institution, you must sell it and knock down. Completely knock. You may even have to give it free. Because number one, if you look at the governance structure, I will always say that I've been in NIB before, I work in NIB. What NIB has come to this point, and people don't want us to talk about it. And I said it the last week. You see, NIB has had a poor corporate governance practices since about 8 years. And I can tell you what has happened in NIB. And it's so much the governance crisis, the corporate governance crisis, and the debt, non-payment of government debt is what is killing the banks. And even to take you one point today, last Friday, when the MPC came, they told us that the non-performing has risen to 20%. All these things are indicators of the microeconomic challenges which has existed in the economy over the period of years, which we made no attempt to address. And that is what is reflecting at the moment. You're even only talking about NIB. Go to some of the state banks, the banks, the indigenous banks. I had a chance to talk to one or two. It is nothing good to write home about after the DDEP. So NIB is suffering from corporate governance crisis, non-payment of government debts, government loans, and at the same time the DDEP. So there are three factors that has combined that has brought NIB at this point. And what best we can do, we shouldn't rush, like Prof said. We should take our time. Because you see, if you listen to what Prof said, I mean, when we did the banking sector reforms, it hasn't changed anything. But they even quoted that it cost us 25 billion cedis. And if you go to the banks that they profess to have set it up, there is nothing, it is not good to anything good to write about. And when they brought in the GATT, it has also compounded so many things that currently, those who even went to GATT, if they had their own way, they would have packed and leave. Because you see, when the borrowing was going on in the 2017, 2018, some of the people who told plainly that we are borrowing for disaster. And it has come as a disaster. And the unfortunate thing is that this contracted non-payment to NIB, it's been there. It's been there, I can tell you. 2015, they didn't publish the account. 2016, they didn't publish. 2017, they didn't publish. For almost nearly 6 years, they haven't published it. Why? Because they have been juggling with this problem over the years. So I would agree with Prof that we should take our time. Not that IMF has said we should do it in their document. We must do it, but we must take our time so that we don't create another crisis. We will create a mega crisis, banking crisis, which we may not be able to resolve for the rest of the years ahead. So we should take our time. I would advise that we should refinance that 2.1 billion, which government is supposed to pay. Government should refinance it, and then see if we can get investors, private domestic investors to come in, or possibly, as Prof said, you get foreign people to come in. But with this current financial structure of NIB and ADB, I don't think it's worthwhile to even consider merger or acquisition or takeovers at all. It's good for nothing. You will possibly create a monster which will not be able to resolve for the years to come. Considering even the social impact, all those guys who were stuck on these banking financial crisis, what has happened to them? They have no business. And now we're going to compound it. After another 3-4 years, we're going to compound the social impact. So I would plead with them that they should take their time and do extensive diagnostic findings so that we can refinance the government debt and see if we can get somebody to buy what we call buying a good bank from a buying bank, so that you can buy a bad bank from a good bank. Other than that, we're going nowhere.
Going on a quick break, but let me ask you this quick one, because you mentioned that you have been in NIB before, and of course you cite the gross, should I say mismanagement or gross?
I will always prefer to use the corporate governance. Corporate
governance, yes, exactly.
You know, when you talk about the corporate governance, you're talking about the board, the management, and the whole structure.
It's in our hearing. It's in our hearing because of what you've said. It's in our hearing that the current chief executive officer has worked out of the bank, or within the last year, worked out of the bank and lived in Canada, did his meetings on Zoom and his directions on Zoom and everything on Zoom for almost a year. Is that the case? Have you heard anything like that? Do you have any information to that?
You see, when I hear things like that, for me, like Prof will tell you, those who research and do research, it's not a hearsay. There could have been worse things that before then. And I don't want to disclose things that happened there.
We are making sure people are safeguarded. We are making sure that.
That's why I told you that it is only a bit of it. I'm talking about a whole corporate governance failure there, starting from when Dr. Ayakranche left, when he still rest in peace. Ever since Dr. Ayakranche left, it has been like a football game. You pass it there, this one will cross it, pass it there, without losing the focus of the mandate of NIB. I'm telling you, I'm speaking not as an insider, but I have so much information about that institution that when people talk about, let us talk about what the man has done. There are other things that people have done with NIB. NIB started opening branches when they didn't do project feasibility of the branches. NIB employed, if you look at the figures they presented today, NIB at time had employers from 900 to 1,900. Who do they employ for what? For what were they employed for? They were not employed to create value for business. It became a political game where you can play the game and who can play the game. So I don't want to pass blame games. Like Prof said, let us be very proactive and look forward and see how best we can salvage something out of NIB. But if you want to listen to what people are saying that this one has done, I can tell you worse things that have been happening in that institution.
Let me go on the break and come back for the last 5 minutes. And when I will come back to ask about the essence of, and I used to ask Prof, if you remember, during the financial sector cleanup, I was always asking you this question about the essence of the banking supervision unit of the Bank of Ghana. How we get to where we are with some of these commercial banks when we have a banking supervision unit at the Bank of Ghana, and what's their relevance? What are they doing? Don't they go around to... Doc is citing a number of issues, poor governance issues in there. The banking supervision unit should see this. Let me go on the quick break. When I come back, Prof, I'll come to you on that briefly. You're welcome back from the break. I don't have a lot of time, so let me come to you straight, Prof, on the essence of the banking supervision. And I think that may be the last bite because of time. But I would want you to add what the way forward is finally. You have proffered a lot of ideas to the government and the Bank of Ghana. But for you, because by now, even through this discussion, a lot of people will still be losing confidence in these banks that we are talking about tonight.
Yeah, I mean, it shows we should put a customer into perspective. And if you are going to merge two weaker banks, I mean, if you're a customer of ADB and NIB is being added to your bank, and will affect the financial standing of the two coming together, or you obviously advise yourself. I mean, you were talking about the banking supervision unit. You see, everything that we are discussing here lies at the doorstep of the Bank of Ghana. And then the way and manner our financial system has been intertwined with double standards, to which we don't stick to regulations. You see, when you compromise the independence of a central bank, it affects so many things. It affects, the central bank itself. It affects the banking, sector and everything. Now, how are, the MDs and all those board members, how are they appointed onto, the board? You must bear a party card, even if you're a professional. When you go on the website, you will see independent, governors, independent board members. They are not independent anywhere. They are all part of the governing body. They are all part of the government. You must align before they put you on there. So clearly, we've compromised one way or the other the kind of independent lens that is required to execute a supervision. That is one side of the central bank. The other one that we may have to look at is, how does the central bank employ and the caliber of people that are there? Are they going through their usual, on-site, off-site, supervision that they do? And if they see anything that is untoward, do they have any crisis management strategy that they can rely on to say that we are advising this bank to go off and then try to reorganize itself in that manner? We don't see that. Everything seems to be formality. This country, usually, let me tell you, auditors come and audit, they write their report as to whether the impact of the report on the company's going concern and all those, we don't even look at it. So effectively, we end up, going through the business as usual. And the Ghanaian economy that we find ourselves in now is not business as usual.
Yeah.
We may have to embrace some things.
Right.
So effectively, I can tell you that, yes, indeed.
What Prof said about governance and the regulatory governance, which is the supervision and what have you. It is true, because you see, in 2017, Bank of Ghana stopped NIB from giving new loans. That is it. And what have they done? Like Prof said, you don't just say don't do it. And what next? At least from that time going, they should have presented a paper to maybe the Minister of Finance that, look, the way we have seen it, we cannot go on and on. But you see, look like when I come to audit it or supervise it and I see it, I just write my report and go.
Right.
The consumption is for the ministry and for those in position to be able to salvage it. Because if we have done this in 2017, 2018, we wouldn't have this magnitude of challenges.
All right.
Unfortunately, as if you go there business as usual, like Prof said. No.
All right.
You must be proactive.
All right.
Like Prof said, the whole regulatory architecture, I think, would have to be reviewed.
All right.
The whole regulatory architecture.
All right.
Because we need to have this twin peak approach where we can have regulation one body, conduct regulator one body, so that we can protect what is going on.
Okay, thank you very much, Dr. Richmond Asante. And of course, we had Professor Lord Mensah, who is a financial economist at the University of Ghana Business School. Dr. Richmond Asante is a banking consultant, and I am your humble servant, Kwesi Free on the bottom line. We will end with a statement from the workers of NIB and pleading to government not to dissolve NIB or not to merge because of fear of job losses. See that, and we'll round up with that.
Amen.